Are you ready to fire your landlord and become a homeowner? Well, in this part 2 video of our renting versus buying video series, we are going to do a deep dive into home ownership, the pros of home ownership, the cons of home ownership, and the financial differences between renting and buying a home. Stick around until the end and we'll give you some money-saving tips if you're looking to become a homeowner. Hey there, my name is Emmanuel Vasquez. I am a real estate agent here in sunny South Florida. And in this video, we're gonna do a deep dive into home ownership. As usual, we like to keep things casual, so go ahead and grab your favorite beverage, pen and paper, and let's dive right in. So here we go. First up on my list of pros is going to be equity building. Unlike when you're renting and you're paying someone else's mortgage, when you're a homeowner, with each mortgage payment that you make, you are building equity in your home. What's equity, you ask? It's like a stake in your own property, and it grows over time. So think of it as an investment into your future. Next up, let's talk about stability and control. When you're renting, you have to ask permission for everything you do. If you want to paint the walls, if you want to hang TVs, if you want to do anything, you have to ask your landlord permission, or otherwise they might take money from your security deposit, etc. But when you're the homeowner, it's your house and you can do whatever you want. You can customize it however you want, and you know that you have the stability of a permanent place to call your own. You don't have to worry about landlords telling you what to do. It is your kingdom. Do with it as you wish. Next up on my list of pros is the potential appreciation. Now, real estate historically has been known to be one of the best investments you can make. Over time, your home will appreciate in value. The only time that I tell customers to be careful about buying real estate is if their intention is to not stay in that property for more than a couple years. If you're looking to buy a home and sell it in a year, be mindful that it might not appreciate enough value for you to make some money and get a nice return. So appreciation is always going to be there so long as you remember to keep that property for a couple of years. Another pro of home ownership is your fixed monthly cost. Unlike renting, when you're a homeowner and if you have a fixed rate mortgage, you know exactly what that amount is going to be every single month for the next 15, 20, or 30 years, depending on the length of your loan. You know exactly what that mortgage payment is going to be, and it will not change. When you're renting, rents increase typically every single year when you renew your lease, and you don't have that financial stability to be able to budget for your expenses every single year. So knowing exactly what your monthly payment is going to be every single year without change is a huge benefit of becoming a homeowner. Next up, let's talk tax benefits. When you're a homeowner, you sometimes are going to be able to deduct certain things like the interest that you pay on your mortgage and property taxes as well. So having that ability to reduce the overall tax burden every single year is another great benefit of homeownership. And finally, homeownership provides a sense of accomplishment. It's a sense of pride in knowing that you have accomplished a major life milestone, and now it allows you to lay down your roots and start building your memories with you and your family. Now, I don't want to be Debbie Downer here, but let's talk about some of the cons, some of the negatives of becoming a homeowner. And the most important one is going to be higher initial cost. So when you're renting, typically to move into a rental apartment or home, you're going to pay a security deposit and first and last month's rent, and that's about it. But when you are buying a home, you're going to have things like down payment, which can be anywhere from 3.5% or 3% all the way to 20%. Now, you are also going to have things like closing costs. A lot of people forget about those closing costs. So overall, your initial upfront costs can be substantially higher than renting. Next up on my list of negatives is going to be maintenance and repairs. Sorry, but when you're renting, the landlord takes care of these things, right? You don't have to worry about anything when you're renting. But when you're the homeowner, you're the landlord. You're the one on duty. It's your responsibility. If a faucet starts leaking, if the roof starts leaking, if your refrigerator breaks, guess what? It's your responsibility. So one of the negatives of home ownership is the additional maintenance costs, which you honestly can't prepare for. Now, I will say that some homeowners, the smart ones, go ahead and buy home warranty plans. So that way, if anything happens in the future, the home warranty can help cover some of those costs. Another smart thing to do is just start saving and put money aside for a rainy day. So that way, if anything were to come up in the future, you have the funds to fix it. Another con about home ownership is going to be less flexibility. When you're renting, you could pick up and go and do whatever you want, and you don't have to worry about that home. Now, when you're the homeowner, it's not that simple. That's your property, and if you want to move or have a change of scenery, it's not as simple as just packing up your bags and going. You're gonna have to list that property, get it ready to sell the property, and that process, depending on where you are in the process, it could take anywhere between, 2 weeks to 30 days and all the way up to a couple months. So the lack of flexibility is another con of home ownership. Let's talk market risk. Home ownership typically is going to be a good route, and it's always going to be, let me not say always, but 90% of the time will be a good investment. But there's always risk. We had a big crash back in the 2008 market crash, and a lot of people lost money. So with home ownership comes the negative, if you will, of a market risk and market crisis, and you potentially losing on that investment. So again, overall, typically, if you keep the property long enough, everything will even itself out and you will make money. But you have to be mindful of the market conditions and the potential to lose money. Next up, let's talk property taxes and home insurance. When you're a homeowner, you have to get the home insured, and depending where you live, for example, here in sunny South Florida, that requires additional coverage like flood insurance, sometimes additional roof insurance, and typically the property taxes, again, this all depends where you live, can fluctuate. So those are costs that every single year can change. For example, again, here in Florida, with the risk of hurricanes and storms, certain insurance carriers raise their policy fees every single year. It happened to us where we actually had one of our carriers terminate our policy, and we had to find a new one, and it was at a higher cost. So again, property taxes, homeowners insurance can sometimes be a con of home ownership. And finally, let's talk opportunity costs. When you're a homeowner, you are investing a lot of your equity into one asset. So it limits the money that you may have to invest in other things that could potentially have higher returns in a sooner time period. So keep in mind that, again, home ownership is great, but it could tie up your money into one asset. So what is the biggest financial difference between renting and buying a home? And to me, it's quite simple. The biggest financial difference between both is equity building. When you're renting, you're not building any equity at all. Every rent payment that you make goes towards building your landlord's equity and paying off his or her mortgage. Versus when you're the homeowner, you are building equity in yourself. You are building with each mortgage payment a stake in your property that eventually in the long term will have a substantial return on that investment. So to me, when you ask me what is the main financial difference, it's equity building. Now, if you've made it this far into the video, I want to give you some quick money saving tips if you're looking to buy a property. Now, the most obvious one is saving for a down payment. If you don't have the funds right now for a down payment, then I will tell you, and I'm a real estate agent, but I will still tell you that renting should be the way to go. Rent for a year while you save up money for your down payment. And how can you save up money for a down payment? Simple. Start to cut back on some of the things that you really don't need. Do you really need to grab coffee every day at Starbucks? Do you really need to go out to the movies every single week? Believe it or not, if you plan accordingly and you write down a budget, you'll start to identify things that you're spending money on that are not truly a necessity. So start saving for your money, and by the time your lease is up, you'll be in a better financial position to buy a home. Another money saving tip is shop around with your lenders, with your insurance companies, even with your inspection companies. Don't just necessarily go with the first company that you find. Now, as a real estate agent, I always give my customers 3 options for every service that I recommend, whether it's a lender, a home insurance company, a home inspection company, and I always tell my customers, call them all, get a quote, and if you want, don't tell them I said it, but you could kind of pin them against each other. You can say, hey, they're offering me this, what can you offer me? And believe it or not, just to win your business, they might reduce their fees, they might match what the other competitor is doing. So shop around in all the services you do when purchasing a home, and that'll definitely save you some money. Another great way to save money is negotiate on the purchase price. Now, obviously you're gonna be working with a real estate agent, and your real estate agent will be best to advise you on how to do that. But don't just offer the full price just because you love the home and you want it. You never know unless you ask what that seller's willing to negotiate. Oftentimes, you may be able to knock as much as 10, 15, 20, even 50,000 off of the purchase price in the right condition, in the right scenario, I should say. If a home has been sitting on the market for a while, that seller may be in a position where they're just anxious to sell, and they might consider your offer, even if it's 20,000 under asking price. So another money saving tip is don't offer the full price unless you absolutely have to in a hot market, but don't offer full price and save yourself some money. Another money saving tip is consider an energy efficient home. Now, that won't save you money immediately up front, but over the course of your home ownership, things like solar panels, things like energy efficient tools that the home has will help you save hundreds, if not thousands, on your utility bills over the course of your home ownership. So if you want to save money in the long run, consider homes that are energy efficient. Now, my next money saving tip is very popular right now in today's market, and it is what's called a 2-1 buy down program. Now, with the rates being around 7% and so-called high, what we are doing with some of our customers is we are asking the seller to buy down the customer's interest rate. How do you do that? Well, it's called a 2-1 buy down program, where we go to the seller and we say, hi, Mr. and Mrs. Seller, we are going to give you what you are asking for your home. However, we want you to buy down the interest on our loan for the first 2 years. And the way it works is, let's say you get quoted at a 7% interest rate. Well, year 1, the rate would come down 2% to 5%. Year 2, it goes up 1% to 6%. And year 3, it goes back to the original quoted amount of 7%. However, by then, the rates probably have dropped, and now you have the opportunity to refinance. Now, that'll probably end up costing the seller anywhere between $8,000 to $10,000 to $12,000 if we're looking at an average price point between $400,000 and $500,000. But it'll save you hundreds of dollars on your monthly mortgage for the first 2 years of your loan. So you want to save some money up front, ask your agent to speak with the seller, and in your offer, request a 2-1 buy down. So there you have it, guys. I hope those tips helped. And if you found any value in today's videos, please do us a favor and hit that like button. And don't forget to subscribe to our channel. We do weekly videos on the real estate market here in South Florida. We do beautiful home tours, and we are here to help any way we can. If you don't know by now, we service the South Florida market, more specifically Palm Beach County, which is going to be your cities like Boca Raton, Delray Beach, Lake Worth, West Palm Beach, and so on. And if you are looking to relocate to sunny South Florida, whether you're looking to rent or buy, reach out to us. We get phone calls and texts and emails from people just like you, every single month that are looking to make their move to sunny South Florida, and we're here to help. So reach out to us any way you can, whether it's a text or a phone call or an email. Our contact information is in the description below, and we would love to help you next. Until next time, thanks for watching.